Hey everybody, it's Uzi from the Option Selling Institute, the Discord where we sell options on stocks, futures, indexes, where we specialize in earnings trades, both pre and post market, where we do speculative trades every now and then, where we try to go long a stock, particularly maybe a small cap where it has room to run, and we try to finance that long position by selling and taking in a credit, whether it's either on the put side or put credit side. Um, yeah, we have a highly successful Discord. We've only had 4 closed losers in the past 8 months, and I'll share a member review before the end of the video. But in this video, I just want to talk about today's market. Today's market was pretty red, right? Pretty red as far as so many stocks and industries were down. Didn't seem to be, that way as far as in the overnight session. It was a little bit red overnight in the futures, but then when we had the markets shaping up in the morning, particularly right after around, I guess, 8:30 when some of the data came out. I don't know, the markets just turned red, really red. So let's get into what we had today and see where we might be going, in the future, because we do start the new year on Thursday. As far as the trading sessions go, let's see what we might be in store for. All right, let's get started with the SPY. Now, I haven't had a chance to really look at too many charts tonight. I just want to go through these with you. So I'm going to be doing it as I'm doing it on my own at night. I'm going to share it with you. So let's take a look at first at the SPY, then the Qs, then the IWM, and I'll go over with you what I see. I mean, right off the bat, let me get my drawing tool. Right off the bat, the SPY number one closed today, gap down and closed today below the 50-day moving average. That's not good. Okay. Number two, we have broken a trend, or we're about to break a trend. If you go back to, let's say, the beginning of November, where we had this uptrend going. So we closed below that uptrend there. And it's a very, minor uptrend, but it's an uptrend nonetheless, where it had been bouncing along the 50-day moving average. We have a slight possible head and shoulders top starting here. And if you take a move and you bring it as far as, this is not accurate as far as, to scale, but I'm just eyeballing this with you. Boom, boom. That lines right up with a horizontal trend line that I have on my charts for some reason. I don't want to go back too far and look, but it lines up with something I already have marked out here. And then we also have an ascending trend line not far below, which also coincides with, guess what? The 200-day moving average. So it doesn't look great. All right, let me erase this. It doesn't really look great. We really have to try to get back above this 50-day moving average pretty quick in the SPY. Try to, trend a little bit higher, bring some higher lows and higher lows and higher highs, and try to break through the 609 area and try to get to new highs. If we don't do that, and we just kind of go sideways here now, into the new year, the first week of the new year, we might see the test of the 200-day moving average, which would bring it down to about, let's call it 550. All right, that's what I see on the SPY. Hope I'm wrong for you longs, and for you shorts, that's an area where you might see some movement. All right, let's take a look at the Qs quick. All right, the Qs, a little bit better shape in the sense that they did not close below the 50-day moving average. The 50-day moving average held pretty strong, and I'm just going to do an eyeball trend line here. All right, we're good still. If you look at that eyeball trend line, we closed above it. Okay, we're above the 50-day. Yes, we do have the 8 EMA crossing over the 21 EMA. And let's just take a quick look and see if that shows up over here on the MACD. And well, while it doesn't show up as far as across today, you can see how the signal line is heading lower with a negative histogram entry today. So that's not looking too good. But what does look decent is that it held that 50-day moving average, like we said. And it held this eyeball trend line here. So we have two things going for it. And not so good here with the 8 crossing the 21. This gets a lot of traders out. This gets a lot of traders out as far as, 8 over 21 type of traders. I know a lot myself, and there's some big names out there that, especially with prop trading, this is something that they do. They would be selling short on a cross like that. All right, let's take a look at the IWM real quick. The IWM is kind of in the same category as the SPY in the sense that it did close below Well, it's been below the 50-day moving average for now. It looks like going on 2 weeks now. It's heading toward its 200-day moving average, and you might call this a test of it today, even though it didn't really go too far below, if at all. This gap down day here, which went green on the end of the day, by the end of the day. So it may have held that support line there. It kind of coincides with this whole support line here. So this might the IWM might have found a short-term bottom here. You do have wide Bollinger Bands, which you could call this an attempt, to take out the lower Bollinger Band, which it failed. So now you might see price try to find its way back up to the 50-day, test it, see what happens. If it can get above it, it might try to make, some higher highs, higher lows, and then try to break forward and get through that all-time high there, 244.98. All right. All right, now let's just go through some of the sectors, okay? Some of the sectors, so we can take a look at the semiconductor industry. The semiconductor right here. So again, same thing as far as the Qs and the SPY. We've got it below the 50, above the 200. We have some moving average crossovers going on right about here, but this could be a successful test of the 200. It did come on some relatively light volume, so that's not, that doesn't have to much to say about that. Would have been nicer to see a little bit of a higher volume bar here, and then bounce off of this in the days going forward. Bollinger Bands are wide, somewhat wide, and yeah, so sort of almost a squeeze going on here. I'm looking down at the TTM squeeze, almost a squeeze going on. So as these Bollinger Bands narrow out a little bit more and coming together, you might get, a little bit of a burst forward here to test this upper resistance line here, because it looks like it's already testing some of these over here down low. So probably going to bounce around for the first couple of days of the new year until it decides what it's going to do. And so that's the semiconductors. And, a lot of the semiconductors were weak today. So, it makes sense that it's still going to do some price discovery and bounce around in here. All right, let's get on to the basic materials. Basic materials have been selling off now for a month, going on a month here. Once it broke through the 50, it kind of just meandered back and forth, tested it a few times, and then it just gave way, tested the 200 a couple days. Boom, that wasn't good enough. So it's now crumbled, down into, I guess, let me open this up a little bit and see where we're at on support. We're well below the 200-day moving average on the basic materials. So, it looks like it's going to try to, find some type of a level of support down in this area here. I'm going to eyeball this going across. So we're almost there. We're almost at a level where you could say, okay, the basic materials are going to try to do a little bit of a bounce from this congestion on the far left going back to December, end of that last year, beginning of this year. All right, so it's 12 months later, and the basic materials are right back where they started. All right, so that's not good going into the new year. All right, let's take a look at the financials. Now, the financials, they're usually a stalwart in the markets. They make up a lot of the Qs, the SPY, and the industrials. Again, this one's now below the. Let me correct this. What's going on here? Okay, I don't know what that was. Idiot message. It's below the 50-day. It's been below since Friday last week. Okay, so today was a gap down. I guess you'd call that a successful test of the lower Bollinger Band with a. I guess you'd call this a doji. Okay, it's a doji here, even though it's a bar chart. It's a bar chart. It's a doji. If I were to switch over, and this area kind of caught it. It's trying to work on a gap fill. If you look to the left, it's trying to close this gap over here. So maybe another couple of days of some weakness, close that gap, and then see if the financials can try to work their way up into the new year. Depends, I guess, on the rates. If we're going to be cutting rates or not, the financials are very sensitive to that. So we'll see how that goes. But not looking great, but it doesn't look too bad, being that it held support of these last 4 or 5 days that caught it by the Bollinger Band there. All right, let's look at the industrials. Industrials, another one. So many charts are screaming the same thing. They're all screaming the same thing. If they haven't tested the 50-day and fallen through, they're heading for their 200-day, and they're going to see what happens at the 200-day. So far, so good on the industrials here, holding up above the 200-day, and it looks like you had two things going on. You had a Bollinger Band catch and a 200-day moving average catch on this one today. So, and we also have, I believe, it looks like a doji, yeah. And just to see what's going on here, let me just let me pull this up and switch over chart mode for you real quick to candle, and you can see it's a doji. So yeah, we're looking decent as far as that's concerned. It looks like it might just these two areas might hold 200-day in the Bollinger Band, and we'll see if it can trickle up a little bit higher. You know what? Let me leave it on the candles for a moment here and see how that goes. All right, that's the industrials. Let's go to the technology sector. Okay, so the technology sector today gapped down and landed right on the 50-day and closed right on the 50-day moving average and a lower Bollinger Band catch. We've got the beginnings of a TTM squeeze. I wouldn't expect this to just be a one-day event. So now you're probably going to ride along the 50-day moving average here for a little bit. It is below the 8 and the 21. So it's going to try to probably retest those, maybe try to get above them, bounce within the Bollinger Bands into the new year. And if this squeeze keeps building with more red dots going along the way here, then we can look for a pretty big move, probably in a week or two, after the first week in the new year, which is when a lot of big players usually look to see where the markets might head for the duration of the year based on the first week. That's not my saying, but they usually say as the first week or two goes in the new year, you can get a handle on how the year might go. All right, let's take a look at the consumer staples. Now, this is stuff that you need to have. It's not discretionary. So this is stuff like bread, housing. Well, housing is long yet. Yeah, this is stuff that you need, staples, clothing, food, and stuff like that. So let's take a look. Again, it couldn't hold the 50-day. Okay, it couldn't hold the 200-day. It tried for a number of days here. We even had a little bit of a hammer candle here on this day. Didn't hold it today. Today gapped below the 200 and closed well below the 200. On increasing volume, slightly increasing volume from Friday. So this does not portend well for going forward here. I don't know what it says. It might say a recession is coming. I mean, when consumer staples, things that you need to have, are selling, those companies are selling off, kind of means that we might be heading for a recession. People can't afford their basic necessities. This could kind of drift lower. I do expect though some of the cheaper selling companies, well, I should say that companies that sell cheaper items like the dollar stores, Walmart, Dollar Tree, Dollar General, Five Below. I did a video on that the other day. Those might do well, even though, I'll just pull it up real quick today. Dollar Tree tried to go, it was green at one point, it failed, but it's still not looking bad here. DG, not looking bad in today's market. This is holding up pretty well. Five Below, I think, did get sold off a little bit more. Yeah, Five Below, like I was saying this in my video over the weekend, that Five Below was kind of the weakest looking, only because it has come down. It's over to the left here. It's a pretty sharp down. It's been going sideways, and then we just gapped up into the 200-day moving average on earnings. So now it's trying to digest those earnings and find its way. I believe it's going to probably retest the 50 before it can try to head back up and retest that 200-day. But yeah, the Five Below got sold off pretty much today. All right, let's get back to the sectors. Real estate, another one that's suffering. Suffering now for a month. All right, it tried heading higher. It got it to that upper Bollinger Band, got rejected. It fell back to the 50-day, couldn't hold it. Again, when you can't hold the 50-day in a market like we're seeing, the next level is the 200-day, and it looks like we got a doji here or a hammer it's a hammer actually on the daily. Let me just erase all this for a second and let's zoom out. Let's get to 30,000 feet and see what we're looking at here. All right, so it looks like it kind of found support, and I can use a trend line here. It kind of looks like it found support, based on some of this area over here. Pull it to the side over here. So it's trying to hold, this, if you want to call this was a cup and handle, nah, not a cup and handle, maybe a small little head and shoulders that never really formed a good shoulder on the right, but it sure ran up, and then it double topped. Okay, you got a double top here, right here. And then of course, when you get a double top, you take this distance, you go like that, and here you go. Boom. So you're looking at about, this could be an area where it bounces. You got horizontal support, you've got the double top, boom, move, equal move down. You're right there right now. So I would look maybe for the real estate area to show some, a little bit of a bounce, a little bit of a bounce. Maybe you try to head up now and cover up some of this run down from 45 all the way down to 39. All right, which, it doesn't sound like much, but it's a pretty big move in a short period of time. Utilities. Utilities, another one now in between the 50 and the 200, but a nice looking doji, hammerish looking candle right near, not near, but close enough to the 200 that you could call that a test. On slightly higher volume. So, we got a down move, gap down, not much, but a small gap down. We have a somewhat of a hammer candle on above average volume and the 200-day right there. So that's not too bad. That looks like this one could bounce the utility sector. And let's go over to the healthcare industry. Healthcare has been getting beat up pretty much, I guess, since it looked like if Trump won, that you're going to have RFK come in and kind of revamp the health system, if you want to call it that, or redo how things get done in the healthcare industry. So ever since we have this all-time high here, you had nothing but a downtrend. With a couple of bounce attempts, right back to the moving averages, bounced back to the 50 here, came down to the 200, bounced back to the 50, fell right through. Must have found some support here looking to the left, back up to the 200, and now it found, got caught by the Bollinger Band, but it gapped down today, and not looking great, not looking great for this sector, the healthcare sector. We saw Humana, United Healthcare, Cigna, a lot of those big names get sold off not too long ago. Let's just pull those up quick and just take a quick look. You see where, Humana got just obliterated. Boom. Bounced back, tried to get to the 200, but can't. Cigna, another one, fell out of the sky, almost 100 points, lower 337 down to about 350 or 340. United Healthcare, another one fell right out of the sky, and these stocks are just so beaten, and these charts are broken. But that's why XLV, which is the healthcare sector, the ETF, looks so ugly too. So it's not turning around anytime soon. Sorry to say it. And then you have the discretionary. So this is discretionary spending. This is the things like you have to ask yourself, why did I buy this? This is something you don't need, is something you want. Which, to be honest with you, look how strong it's been going. I mean, it's been in a nice uptrend for a while, and it kind of got away from itself by curling up higher, made an all-time high 240, and now it looks like it's in its descent, if you want to call it that, with the potential of I don't really see. Yeah, I mean, you might see a little bit of a Head and Shoulders quickie here going on. Head and Shoulders top right here, with a neckline, a really weird looking neckline over here. So if you take some of these moves here, you're looking at about an area of about 210 on the downside, slightly below the 50-day. And again, that looks like it would be one of those where it falls below the 50 on its way to the 200 before it starts to catch a little bit of a hiccup and a bounce. So, again, not looking healthy on the consumer discretionary, which, that's what drives a lot of, sales, food, restaurants, clothing, even housing. You don't really need to buy another house if you already have a house. So it's not really discretionary. It falls into real estate, but if you have a house and it's working and it's fine, you just want a bigger house, then that's something that you don't really need to buy. But this is things like cars, things like trips. So you got Carnival Cruise, you got Royal Caribbean Cruise. Those are areas where, those are going to get affected by if the consumer starts pulling back. Areas like that. All right, what else do we want to look at? Quick. Okay, let's talk about maybe a couple quick trades we did today in the Discord. So in the Discord today, we're already in an ALGN position. We are in a put credit spread, which has taken some heat, but we've rolled it to a decent level. Our short strike is at 210 right now, so we're at 206.58 on the close today, with somewhat of support at this area here, with a somewhat of a hammerish candle. I'm not gonna write home about it right now. Nothing to jump up and down about. But we did sell some naked puts out. I believe it was into January. Yeah, in the middle of January, and well below this area here. So we've got a lot of area that we'd have to fall down to before we're challenged. We sold right around here, so we've got all this distance before we have to really worry. And I do expect a balance. I do expect the market's going to have, even if we hit into a bear market, the market's going to have fierce rallies, which are going to bring stocks, ripping up. That's when you can get out of your cash secured puts, your put credit spreads, get you out of some deep waters you might be in. So don't get all crazy and worried, and don't fret the market. If you're in some positions that are taking heat, you're going to have bounce back short rallies. So you can get out. Hopefully, then just don't go too far out with your rolls, because this way you don't roll so far out that you have to get a bigger bounce before you can get out. So that's that. And then we also put on a strangle in crude oil today. I like the chart on crude oil. Crude oil had been getting sold off for a bit there, as you can see over here. It kind of shot down. Once it went from about 85, it flew all the way down to 65. 20 points in about 2.5 months is a pretty big drop for oil. Okay, it looks like it's found its bottom a little bit. It is wedging. Okay, it is wedging, and it is squeezing. Okay, so we sold the strangle. I won't get into the strikes right now, but we did sell the strangle, and maybe we'll see him. Okay, yeah, you will see him. So here's the strangle. We've got a big area here of a profit zone. Okay, and what we're going to do here is we're probably going to take it off in pieces. So right now you can see that oil is making a strong move, not a strong move. It's made a move up through the 50-day moving average, and I expect it to try to test that 200. When it tests that 200, we're going to be getting out of our short puts, and once it runs a little bit and runs into some overhead resistance around here, we're going to be trying to get out of those short puts. We've had about 50 or 60 days on this thing, so we hopefully will be out of this in about 2 to 3 weeks with 50 or 60% profits. And this was a nice trade because we brought in almost $400 per contract. So that's what we did in the Discord today. And yeah, I like putting on strangles, especially on futures when we have a setup like this. It's in a nice area, and yeah, we love doing futures when the chart's set up just right. We like to let them expire for the most part for 100%, but I don't want to play around with gold, with oil, and with the ES. So we're going to try to close this between 50 and 60% most likely, and go from there. So with that, these are the type of trades we do in my Discord. We trade anything and everything as long as this chart is there and has a high risk to reward setup. Like I said, we only have 4 losers in the last 8 months. My members will back me on that. And we have a great team in there. We have great sets of eyes, always looking for other ideas besides mine. And if it's a great idea that's presented to me, I'll put it into a trade for the whole room. But for now, we're running on low trades right now, only because it is the end of the year. We want to be light, go into the new year with not too much. We already have a number of positions on, so we're trying to not put too many new ones on. But I liked oil today, and we're trying to make a little bit of money on this ALGN while it's been getting hit hard. And yeah, so yeah, you'll find in my description a way to reach out to me if you want to see if you want to become part of the Discord. I'm going to be doing something special after the new year. Keep your eyes and ears open for that. We're trying to bring in up to 50 new members. That's it. We're going to put a cap on it. We're going to make it affordable for everybody. And I want to help you guys make money. We've had a great year this year, and if you're not doing great, or at least beating the market, come trade with us. We're putting up some good numbers. With that, let me just show you a quick review from one of my members. Um, and he says that he's has experience with different trade alert services for years, and that he says that but by far that he feels that my Discord, the Option Selling Institute, is the best one that he's been in. Um, he says that the room is extremely well organized. Every one of Uzi's trades is clearly and articulately written, so that even rookies and new traders would not have a problem understanding, so they won't misunderstand it. The best part is his nearly 100% win rate. He's right on that, and that I have a prudent and stress-free approach. Now, I wouldn't say that that's always the case. We do have some trades that they stress you out a little bit, so that's a little bit of he's being a little kind there. But we do have all four losers in 8 months. So if you're doing better than that, then you don't need to be with us. But if you're not doing that good, come trade with us for a little while. See if we can help you get some more profits in your account. No reason to be stubborn or egotistic about it. Just come trade with us and make us part of your daily trading. It's definitely cheap enough. You can make your investment back with one good trade. So it's definitely worth it. And he said he strongly recommends the Discord. So with that, here's how you can reach me. You can reach me on Twitter on Uzi Options or Jim Trainer 41, depending on what you type in if you're looking for me. Or here's my WAP site if you want to sign up. If you can't copy this so fast, don't worry. I'll put the link in the description. And with that, I hope you guys have a happy new year. If I don't speak to you before then, be safe, be blessed. I wish you guys all well in the markets and in life. I wish you'd come trade with me. It's a cool place to hang out. We don't have a lot of BS going on. We're all business. We want to make money, but we have a little bit of fun. And it's a good room. It's a good room. So come check it out. See if I'm telling you the truth. So thanks for watching. Please give a like, subscribe, some comments. Tell me if you like this type of content. You want me to go over charts with you guys, tell you what I see. Even though it is quickly drawn out with my little handy tool here. It's better that way. It's right on the fly, right off the cuff. So you can see I can see quickly. I can see what I'm looking at in the charts and share it with you. All right, everybody. Thanks for watching again. This is Uzi, and we'll see you on the next one. Okay. Thank you.